Malaysian palm oil prices rise amid supply concerns. Malaysian palm oil futures surged on Monday, driven by supply concerns and weaker-than-expected production figures for the third quarter. This price movement highlights the delicate balance between supply, demand, and global trade dynamics for one of the world's most widely used edible oils. Rising prices despite demand challenges. On the Bursa Malaysia Derivatives Exchange, the benchmark November delivery contract climbed by 40 ringgit or 0.91% to reach 4,453 ringgit per ton. This increase reflects growing market anxiety over whether supply will be sufficient to meet global needs in the coming months. However, analysts warn that demand remains relatively weak. According to trade data, exports of palm oil products between September 1st and September 10th dropped between 1.2% and 8.4% compared to the same period last month. This indicates that, despite higher prices, buyers are not rushing to purchase more palm oil, a situation that could cap further price gains if it persists. Production and stockpiles. Malaysia's palm oil inventories rose to a 20-month high by the end of August, largely due to increased production coupled with slower export activity. This buildup of stockpiles initially put pressure on prices, but as expectations for a sharp production increase in Q3 were not met, traders are now focusing on potential supply tightness in the near future. Industry experts note that weather patterns, labor availability, and logistics continue to play a significant role in determining how much crude palm oil Malaysian producers can deliver. Any disruption to harvests or processing could lead to even tighter supply. Global context. Palm oil is closely linked to the performance of other vegetable oils, particularly soy oil. When soy oil prices rise, palm oil often follows suit as buyers switch between these commodities based on price competitiveness. Current price trends in the global edible oils market are therefore adding support to Malaysian palm oil futures. Implications for importing nations. Countries like Pakistan, India, and China, all major importers of palm oil, may face higher import bills if prices continue to climb. This could lead to rising food costs, especially for products that rely heavily on palm oil as an ingredient, including cooking oil, snacks, and processed foods. Outlook. While short-term price increases are likely to continue if supply remains tight, weak global demand is a limiting factor. Market watchers expect prices to remain volatile over the coming weeks as traders weigh production figures, export demand, and developments in competing vegetable oil markets.